Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, September 2nd, 2020. I am Frank Ochoa, aka PivotBoss. I want to remind you to please join me this afternoon for our monthly market outlook for September 2020. I will be discussing what to look forward to here throughout the month and heading into the end of the year, or what we can expect here looking forward. We'll discuss seasonality, some industry group rotation, and also bring some buy and sell candidates to the table as well. Please join me later on this afternoon at 4 o'clock p.m. Central. There is a link in the description of this video, and you can also go to pivotboss.ecofin.com. It's the new website there, pivotboss.ecofin.com, for the new 2.0 version of our trading room. The link will be in the PivotBoss community room. It is free to create an account. If you've already had an account from the previous 1.0, you may just need to reset your password and jump into the new room. So pivotboss.ecofin.com in the PivotBoss community room will be the webinar link for this afternoon, and you can also find it in the description below. All right, let's take a look here at the ES in the daily time frame here. A very bullish month that played out in the previous month here. And now we are sitting just above the previous month's high. Price pushed higher yesterday and closed above it. And now the entire day at the moment, pre-market and overnight, has been completely above the previous month's high. And again, typically speaking, once you get to a cycle high, there is the potential to see a pullback. Even if it's just a little bit, a pullback could provide another bounce opportunity ahead. If this pullback does occur and a bounce starts to fail at the previous highs, or you start to see lower highs develop, we may see a push into the previous month's midpoint, and a failure there would open up the previous month's low. So that's the roadmap right now to look forward to here for the ES, at least early in the week. Again, this morning here, a pretty sharp top coming in at the 35.56 quarters. If that's top holds here, we may be looking at a pullback toward the previous month's close price, this blue dot here. All right, let's take a look here at the NQ. Now the NQ right now up about 1% here pre-market. Again, very strong top here. In the intraday time frame, a 4-minute chart for example, right now kind of a short-term head and shoulder pattern up here, a little bit of a lower high developing below the 450 level. Again, early indications here of just modest top, and that could provide just a little bit of a pullback, even if it's just into the previous session's midpoint or into that previous high. That could provide an opportunity for bulls to defend yet again. So right now this market here super bullish, but when you get to a cycle high, there may be a little bit of a pullback that may occur. But until proven otherwise, these dips are to be bought. But I would just start to be cautious as this thing continues to increase almost at an exponential pace here. As the moves get stronger and stronger, we go from this strength, and now we're at this strength here. At times it only takes a little bit to get that one big swing push down. So just continue to be cautious up here at these highs. We have now reached our 100% target as well. So from this key range that developed back in June and July, we got our upside targets 11,723 and 12,388. Those were the upside targets to shoot for. Now we have to look for the next move to give us another key range and new targets. Okay, let's take a look here at crude oil. Now with crude oil here, you'll notice how compressed it continues to be. And this compression is very curious. It's incredible how compressed this market has been. If you look at the 10-day average range, it's under $1, 98 cents of range per day on average for the last couple of weeks. If you look at a 5-day average, it's averaging 87 cents per day. At some point, something's got to give as well. And this reminds me of the recent time where we had this compression right there. That compression looks very similar to this compression, and we had to get a big shakeout leg down before it could go up. Perhaps that may be something that happens here pretty soon. If it can't get above the key range high there, then maybe it needs to swing back a bit and then try again. So again, we got this compression phase right here. It's best to avoid the chop, but once expansion starts to occur, it could be a very swift move. So continue to be patient ahead of expansion. All right, let's take a look here at gold futures. Now gold, in the previous session we mentioned could have a big high range day. Gold ended up having a range of about 46.79 points. We mentioned there could be about a 50 point to 60 point day. Very, very close to that 50 point day. I'm very surprised that we didn't grab the previous session's low that day, instead coming down to take it out here in pre-market trading. If you look at the last couple of days, you actually have kind of a head and shoulder pattern that's developed in the 60-minute time frame. And right now 1960 is the neckline of that pattern, and a failure to hold 1960 could open up a rotation back into the 1910 previous week's low price. So here it is right there. That's about 1910. If there's a failure to hold this 1960, that could open up a return back to 1910, and that could lead to a bounce right back up. That zone has been defended so far. So right now, very clear compression pattern. A break above 1990 would open up to the upside here. So we could be looking at a continuation toward that 2020, which was the original target if we could push through those 3-day highs. Subsequently rejected yesterday. So right now, watching 1960 down here, and anything above 1980 and into 1990 could open up some upside. All right, that is it for now. We'll see how this develops heading into the rest of the session. Again, please be sure to join me later on this afternoon at 4:00 p.m. Central Time with the Zoom webinar meeting link down below. Enjoy your day, and I will see you in the trading room. Take care.